let's put the focus on something like a Gensol Engineering. Now, this is one stock that was in focus even last week on the back of a sharp correction. The stock has shed almost 40% in the last 5 days, down about 56% in the past month. And this comes on the back of an ongoing debt crisis that has put pressure on the promoters, who have recently also pledged their shares, putting further downward pressure on the stock and severely impacting investor confidence. To tell us more with what has happened with Gensol, we have Sajid and Vishwanath joining in.
That's right, Mika. To begin with, just a brief background of Gensol Engineering. It's a renewable EPC player, and it also has EV leasing business as a business segment. The company came out with an IPO to the BSE SME segment in 2019, and then subsequently in 2023, it was migrated to the main board of the National Stock Exchange, and then it became a multi-bagger from there on. It went to a high of over 1124 rupees in June of last year, and from there it has fallen nearly 72% from the 52-week high as we speak. If you look at some of the claims that has been made by Gensol, it had guided for a revenue of 2,000 crores in FY25. For the 9-month period of FY25, the total revenue stood at a little over 1,056 crores. So it's missing the revenue guidance which it has been giving to the investors in the last 2 years. This is the second consecutive year of miss for Gensol, because in FY24 it had guided for 1,200 crores of revenue, and it came out with a revenue of nearly 900 odd crores there. So and the second thing which has come into light is the kind of order book. It's been claiming that it has an order book of 7,000 odd crores. This 7,000 crore order book, 3,000 of which has come in the last one quarter, which is Q3 of FY25 and January of 2025 there. So last one quarter it got 3,000 odd crores, but most of them being a turnkey projects, it's not been able to convert many of them. It claims that the reason for not being able to convert is the clients or the developers have not been able to pass on or hand over the land so that they can start the EPC work, and they expect this entire project to be completed, or EPC orders to be completed in the next 18 to 24 months there. There are other misleading claims which is coming in from there. The promoters of Gensol in the earnings call have stated that they have sufficient liquidity to support operations, but what we have seen is that rating agency ICRA and CARE Rating have come out with a downgrade to default, which is D in the rating for all the bank facilities which is there. And in fact, ICRA went ahead and said that the Gensol has falsified document to show that it was servicing debt. It has got a communication from the lender saying that the debt servicing is not normal, and there has been default in that, and subsequent to that, the two rating agencies have downgraded the stock to default there. And that happened on March 14 when the entire ratings for 2,550 crores of bank facilities, which is long-term facilities and short-term facilities, was put on default. Just to give a perspective there, in the limited review balance sheet of September 24, which is for the 6 months period of April to September, Gensol on a consolidated basis showed a cash and cash balance of 256 crores. A large part of that was lying in fixed deposits in the bank for a period of 3 months, and a large part from 3 to 12 months. What happened to that cash, no one knows, and the company has not been able to give us a detail of it. And Vishy is joining me to give the further details on the company.
Right, Sajid. So, as you said about the cash that was lying in the accounts, as I was looking through the analyst call that happened in February, where the management actually said that nearly half of that 256 crore is available as free cash. So an important question to ask, where exactly the cash has gone. Now, of course, there's a flood of other claims that have coming in from Gensol. The company in its Q3 investor call had claimed that they received 140 crore from the warrants issue, which happened last year, and about 400 crore is likely to come in by December 2025. Now, these are obviously would have been funds that could have been used by the company for working capital and settling other debt. So that we are not entirely sure where that money has gone and whether that 400 crore is actually going to come towards the end of this calendar year. The other flood of claims include a deal that Gensol has been doing with Reflex, where they've claimed that 2,997 EVs will be sold to Reflex for about 315 odd crore, and that essentially this money will help in settling debt that they have taken against these electric vehicles, which would have been paid to Power Finance Corporation. So we're not entirely sure whether that deal is actually going to take place or when the money is going to flow in. At this stage, all the company is saying is that the deal is in the works. Another important transaction like that is that of Scorpius, which is a US-based step-down subsidiary of Gensol Engineering, where about 350 crore worth of funds were supposed to come in. That was on the basis of a sale of the step-down subsidiary. Again, not entirely sure who the buyer is or when this transaction is going to take place. The company is claiming that by March 2026, they should be able to close this transaction. But considering the way governance questions are being raised, we still need to see whether any investor outside is actually going to put that money into Gensol. Some of the other important numbers that we're able to see, Sajid mentioned that the promoters have been actively pledging their shares in the market. But interesting to note that back in September and October 2024, the promoters, Anmol Singh Jaggi, had bought about 12,000 shares and 26,500 shares from the open market instead of converting the warrants that they already held. So what they're talking about right now is a 2.37% worth of stake sale that they concluded last week. Those funds will be used to infuse money back into the company through warrant subscription. We're not entirely sure how that is going to actually take place. The promoters have so far sold about 11.5 lakh shares to raise the liquidity, and they say they are claiming at this point in time that the funds from the warrant, funds from the stake sale will help in issuance or subscription of the warrant. Private credit funds is significantly tough right now, because remember that stake sale is only bringing them 30 crores. They need to bring in another 100 odd crore to actually subscribe to the warrant. So if they were to go through the private credit route, that is going to be very difficult. Nearly 82% of the stake is pledged at this point in time. So on what basis will private credit funds actually provide that money? We're not entirely sure. On top of that, you've seen the share price going down, which will prohibit the ability of the promoters to provide more security if the lenders demand so. So this is the situation where Gensol is at this point in time. But there are a few key questions that we are raising, considering the way things have panned out. The first of which is, where exactly did this 250 crore of free cash that they talked about, where did that cash exactly go? The second important question is, why did the promoters not convert the warrants earlier? Why are they talking about it now, considering that they did that open market purchase of shares in September and October of 2024? Another question is, what exactly prompted, if you see the next question, what exactly prompted the company to not actually take action on the allegations by ICRA? The allegations were of falsifying documents. So why exactly has the company not yet appointed a committee, which was something that they said that they would do, and why names have not yet been announced? Very important question again, if you think that that's such an important allegation to address. How the hell are they actually going to fund that 7,000 crore worth of order execution, right? How is that money coming in? Because debt at this point in time is going to be very challenging. With a default rating, you can't really go to any lender. And even if you go to private credit, again, you've got that issue of excessive promoter pledging that has happened. And the last question that we need to definitely see is whether the market regulator is currently watching the company closely, and whether any questions have been raised by SEBI with the way the disclosures have come out and with the way the claims are consistently being proven wrong from Gensol Engineering.
Thank you, Rishi and Sajid, for giving us, such a detailed, context, what's happening, what kind of questions we need to be asking the company and what answers we need. But Gaurang, I'll come to you. A lot happening with Gensol. I don't know if you track the company closely or not, but, what's your view on this?
I think, we don't have coverage, so I won't give a buy, sell and hold. But, when there are issues like this, as it was elaborated by both your colleagues, corporate governance issue and financial irregularities, you don't want to be a Robin Hood, and try to catch a falling knife. I won't give a buy, sell and hold because we don't have coverage, but investors need to be very, very careful.
Got it. Thank you, Gaurang, and thank you so much for joining us and giving us your outlook on the same.